Australian dollar to US dollar is one bad tick away from a monthly trend flip. Right now, price is 0.6910, resting exactly on the 200-day moving average at 0.6896. The daily trend is strong sell, but the weekly is neutral, classic trap zone. I've got 2 scalp plays to fade the breakdown, and 1 swing that captures 80 pips if the floor holds. Right now, the Australian dollar is sitting on the single most important number on the entire chart, 0.6896. That's the 200-day moving average. And here's what the crowd doesn't see. The daily trend is screaming strong sell, the hourly momentum is in the gutter, but the monthly structure is a clean strong buy. That is a volatility compression so tight, it's a powder keg. There is one danger zone and one hidden opportunity right now. I'll show you both. On screen text for first 15 seconds, large white on black, 0.6896 trap, 2 scalps plus 1 swing. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today, with exact prices and invalidation levels that the institutions watch.my session bias, fading the intraday weakness with a bullish lean only if 0.6896 holds. Otherwise, a daily close below here opens the trapdoor to 0.6867 and potentially a much deeper correction. The single invalidation level that flips the bias is a 4-hour close below 0.6890. Write this number down. If we break 0.6890 today, the entire monthly structure resets, and the strong buy on the monthly gets seriously threatened. Now, here's the micro insight. The herd is heavily short. Sentiment is bearish on the daily, and you can feel it in the order flow. But when everyone is leaning one direction and price refuses to crack a massive technical floor, you get a liquidity vacuum that can reverse violently. This is the Asia proxy. Remember that, it's not just a currency pair, it's a barometer of risk appetite, China demand, and iron ore. And right now, risk is teetering. Let's walk the charts from the weekly right down to the 60-minute, because the alignment here is rare. On the weekly, the trend is neutral. Price has been grinding sideways between 0.7030 and 0.6860 for weeks. The weekly 20 MA is around 0.6965. The 60 MA is at 0.7026, and the 100 MA is at 0.7003. Price is trading below all of them, so the weekly pressure is slightly bearish, but not trending. That's why the weekly model spits out neutral. The 200-week MA is far below at 0.6650, so the multi-year trend is still intact. Drop to the daily. Daily trend is strong sell, no debate. Price has been dropping from the 0.7030 area for 5 straight sessions. The daily 20 MA at 0.6965 is sloping lower and acting as dynamic resistance. The 60 MA at 0.7026 is also rolling over. But look at the daily 200 MA, 0.6896. It's flat, but it's been the anchor of the entire uptrend since June. Price is now precisely testing it. This is the first touch of the daily 200 MA in over a month, and the last time we touched it, we bounced 150 pips. Now the 4-hour chart. Strong sell bias there too. The moving averages are all stacked bearish. MA5 at 0.6921, MA10 at 0.6933, MA20 at 0.6965, all sloping down. Price is below the pivot point of 0.6935. So the intraday structure is undeniably bearish, until it reclaims that pivot. MACD on the 4-hour is printing negative histogram bars. The signal line is below zero, no bullish divergence yet. RSI is at 37.5, not quite oversold, so there could be a little more downside juice. Williams %R is at -72, inching into the oversold territory but not extreme. ADX is at 34. Which tells us the bearish trend has strength. CCI at -35, neutral, so no immediate snapback signal from that indicator. Drop to the 60-minute. Strong sell as well. Price is hugging the lower Bollinger Band. The 5-minute chart shows repeated tests of 0.6908, our S1 support. But here's what most traders miss. The hourly MACD is forming a tiny bullish divergence. Price is making a marginally lower low at 0.6908, while the MACD histogram is making a slightly higher low. It's not confirmed, but it's the first whisper that selling momentum is exhausting. This is exactly the kind of subtle signal that turns into a trap if you're only staring at the daily red candles. Our support and resistance stack is crystal clear. Daily support levels: S1 at 0.6908, S2 at 0.6894. Note how S2 is 2 pips below the MA200 of 0.6896, that's a confluence zone, and S3 at 0.6867, the last line of defense before a freefall. Resistance: R1 at 0.6949, which is just below the pivot, R2 at 0.6976, and A3 at 0.6990. The zone from 0.6976 to 0.6990 is a supply zone where fresh shorts are waiting. Here's the hidden divergence. On the daily, we've got a falling MACD, but the monthly chart is a strong buy with the monthly MACD still bullish and printing above zero. When you have a daily strong sell inside a monthly strong buy, you have a textbook correction, not a reversal, until the monthly structure breaks. That monthly invalidation is a monthly close below 0.6860. So the deeper insight is that as long as price holds above 0.6896 to 0.6890 and the monthly trend remains intact, this whole down move is a buying opportunity disguised as a crash. That's the trap. The catalyst right now is screaming from the headlines. The dollar flat after its worst session since end April, spotlight remains on Fed policy. Translation: the dollar got hammered yesterday on softer data, and now it's pausing. For the Aussie, that's a double-edged sword. Softer dollar is theoretically supportive, but if the reason for dollar weakness is fears about US growth, the risk proxy tag slaps the Aussie right back down. That's why Australian dollar to US dollar is still under pressure. It's trapped in the push-pull of rates and risk. Analyst sentiment calls this a two-part rates play, one-part risk proxy. Right here, the RBA is on hold, but the Fed's uncertainty is everything. The yield spread between Aussie 10-year bonds and US 10 years has narrowed, taking away some carry appeal. Meanwhile, iron ore futures have been choppy, and the S&P 500 closed marginally lower overnight. The ASX 200 index opened with a negative gap. That risk-off pulse is weighing exactly on the Aussie. And when you link to Bitcoin, BTC is also struggling below 68k, confirming that risk assets are not out of the woods. So the cross-linkage screams caution. The Aussie will only find a genuine floor when equity futures stabilize and the VIX stops climbing. MY1 to 2 week directional lean is cautiously bullish above 0.6890, but with a very tight leash. I think the monthly uptrend reasserts and we grind back to 0.7030 as the market prices out recession fears. However, the exact event that invalidates that is a daily close below 0.6867. That would be a clear break of the S3 support and the last higher low on the monthly chart. That would signal the monthly trend has flipped, and we'd be talking 0.6700. Second interaction trigger. Do you think the Aussie holds 0.6896? Comment yes or no. I'm tracking consensus and I'll pin the best reasoning. Coming to trade STUPS. Most people skip this section. That's exactly where the money is made. Keep watching. I'm going to give you 3 precision plans, 2 scalps for the session, and 1 swing that captures the bigger bounce if the floor holds. Every entry has an exact number, every stop is defined, and I'll put up the trade cards so you can screenshot them. Strategy 1, the opening scalp, scalping, high probability. We are playing a simple bounce off the 200-day moving average confluence zone. Right now, price is 0.6910, just above the zone. The setup triggers if price taps the 0.6896 to 0.6894 area and prints a bullish engulfing candle on the 5-minute chart. That's our signal, a sweep of the MA200 S2, followed by an immediate rejection candle closing back above 0.6900. Entry is at the close of that 5M candle, right around 0.6902. Stop loss goes 5 pips below the wick, but hard no lower than 0.6888. So the stop is at 0.6888, just below the typical stop hunt depth. Take profit 1 is the pivot point at 0.6935, which gives us a solid 1 minute and 2.3 seconds risk reward. If momentum is strong, you can trail a second lot to a 1 at 0.6949. The instant void condition. If the 5-minute candle that enters the zone closes below 0.6890, the scalp is invalid, no entry. This is a high probability scalp because you're fading an oversold intraday move right into a massive institutional support. The opening SELP entry, 0.6902, 5M bullish engulfing after tap of 0.6896 to 0.6894, stop loss, 0.6888 take profit 1, 0.6935 take profit 2, optional 0.6949 risk, reward. 1:2.3 R to TP1 invalidation. Void if any 5M candle closes below 0.6890 strategy 2. The liquidity grab, scalping, counter noise. This is the nastier setup, the one that preys on the breakout traders. A lot of weak longs will have stops just below 0.6890, and a lot of breakout shorts will try to sell a breakdown of the 0.6896 level. The liquidity grab plays out when price pierces below 0.6890, triggers those stops, and then snaps back above 0.6896 within the same 15-minute candle. The entry is on the reclaim of 0.6896 after the fakeout, so we wait for a 15-minute candle to close back above 0.6896 and enter at 0.6898. Stop loss is placed just beneath the fakeout low. So if the low was 0.6882, stop at 0.6880. Target is a fast move to the pivot at 0.6935. This often comes within 30 minutes because trap shorts scramble to cover. This is a pure stop hunt scalp, requires fast execution. Warning: if the 15-minute candle fails to close back above 0.6896 and instead closes below, the trap is a real breakdown and you do not enter. This is for traders who understand order flow. The liquidity GROB entry, 0.6898, 15M close back above 0.6896 after false break, stop loss, 0.6880, or just below fakeout low, take profit 1, 0.6935 risk, reward. 1:2.0 are a proxy invalidation. Void if 15M fails to reclaim 0.6896 and closes below right after this. I need to ask you, are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Strategy 3, the session swing, trend alignment. This is the trade for those who see the bigger monthly picture and want to ride a multi-day bounce. The trigger condition is a 4-hour candle close above the daily pivot at 0.6935, and ideally above the 4-hour 20 MA, which is around 0.6960. But for a clean swing entry, we enter on a pullback after that break. So if we get a 4-hour close above 0.6935, then wait for a 1-hour pullback to the 0.6920 area. That's the broken pivot turning support. Entry at 0.6922. Stop loss goes below the daily S2 and 200 MA zone at 0.6885, so 37 pips of risk. Take profit 1 is the R2 level at 0.6976, a clean 54 pips, giving us a 1 minute and 1.5 seconds base risk reward. But we are aiming for the stretch target at a 30.6990, total 68 pips, risk reward closer to 1 minute and 1.8 seconds. Once price reaches halfway to TP1, around 0.6949, move the stop to break even. The invalidation that kills the swing is a daily close back below 0.6890. That would signal the monthly trend is in danger and the swing thesis is dead. This swing aligns with the strong bi-monthly, and it's the trade that captures the mean reversion if the trap springs. The session SNG entry, 0.6922, 1-hour pullback after 4 hours close above 0.6935, stop loss, 0.6885 take profit 1, 0.6976 take profit 2, stretch 0.6990 risk, reward, 1 minute and 1.5 seconds to 1.8 hour trailing stop rule. Move SL to BE when price hits 0.6949 invalidation. Void if daily close below 0.6890. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. 0.5% max on those fast plays. No positions through high-impact US data or RBA minutes. Stops are non-negotiable. This is how you survive to trade the next big move. The Aussie will give you a dozen opportunities this year, but only if you still have capital when the perfect setup arrives. The single most critical level for the next session is 0.6890. Everything hangs on that. If we close below it on the daily, the monthly trend flips, and the whole game changes. Tomorrow, the wildcard is the US ISM Services Report. If that number misses, the dollar could come under fresh pressure, and we could see the Aussie rocket from this floor. If it beats, the strong sell daily could accelerate right through 0.6890, and we are staring at 0.6867. I'll have the updated blueprint 24 hours from now, right before the London Open, if you want the full breakdown on Bitcoin and the S&P 500 divergence that's driving risk appetite right now. That video is live. Tap the end screen. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter.